Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today is the 21st of February 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest and we can continue. Okay, so now then, let's quickly jump into the charts. Now the first one on the chart here is the FTSE100. Now looking at this index, yesterday you can see that the index managed to close with a positive candle here, pushing back up, trying to at least push back up. It kind of failed reaching this key area of resistance that I've got highlighted here, that I've got marked in my chart, the 7,245 level. Now I was talking about this one. Basically this we need to see a nice good push above that level here, above the 7,245, in order to kind of consider further acceleration to the upside. This of course could confirm a forthcoming higher high, and then we could target at least towards the 7,330 zone. And just to kind of show you what that level was here in the past, and that was acted as a nice inside swing high here of the 12th and the 13th of September. So basically the highs of the 12th and the 13th of September. So for now, guys, of course, keep your eyes on that one, but before we consider a move higher here, we need to see a nice good pop above the 7,245 level. But looking at the pre-trading, pre-open trading, looking at the cash index, it's slightly slightly below the closing price, but to be honest, around the same area. So that's why, guys, be very cautious with this one. Today, yep, we could see a further acceleration to the upside, but again, we need to see a confirmation break above the 7,245 level first. If this decides to drop lower and moves below the 7,190 area, then of course this is going to be slightly that little worry zone for the bulls, because we could see maybe further slide. But the only thing is that for a better confirmation of the downside, you could in a way wait until this drops below the 7,150 level, and then of course you could target the areas like the this little low that we saw here back on the 8th of February around the 7,065, or even actually going all the way lower towards the psychological 7,000 level. But again, I'll repeat myself, in order to kind of consider further declines, or let's say a decline, just a decline in general, we need to see a nice good drop below the 7,150 level first. On the upside, like I said, it's the 7,245 that we are keeping a close eye on. Jumping into one commodity, or should I say precious metal, gold. Now I was talking about this one in one of my previous videos, and basically I was telling you guys to keep an eye on the possible retracement, a little lower, move a little bit lower, which we yesterday got after the FOMC statement release. So yep, guys, for of course, we had a nice sell-off. We had a nice, a statement minutes. It was the FOMC minutes that came out. So yep, we had a nice sell-off here, and it managed to almost reach this upside support line here, taken from the lows of the 14th of February. So now the big question here is, are we gonna have a break here lower and a continuation push to the downside, or actually this is gonna be like a nice support ground for the bulls to start jumping in again? Currently you can see that this precious metal is trading below the pivot, which is a bit of a bearish sign, of course. But for a better confirmation of the downside, let's wait and see if we get a nice good break below the upside support line, and then of course we will target areas like the 1233. This could be just a little small short-term obstacle, but the area that we're keeping a close eye on is of course the 1326 zone, so marked near the highs of the 31st of January. So in a way, if this decides to travel further down towards the 1326, well, if the 1326 level doesn't hold, I mean, this could turn out to be quite ugly for gold in the short run. We could see further declines here, maybe even actually towards the 1315 level. But for now, guys, let's play it safe, short and simple. For now, keep your eyes on this upside support line, and of course this pivot here for today. A nice good push higher certainly could increase the chances of seeing further moves to the upside, but for a better confirmation, in a way, you could look for this 1346 level, which was near the recent highs here. A nice good push above the 1346 level could lead this precious metal towards higher levels like the 1355. So for now, guys, probably let's play the waiting game, and let's see which way gold will break through. Jumping into another commodity, which is Brent oil. Now looking at this one overall, yes, we are climbing higher. We are trading above this little short-term upside support line taken from the lows of the 26th of December. Now yesterday we had a nice initial drop, but then you can see that by the end of the day it picked up quickly. The bulls picked up and managed to drive the commodity above its key area of resistance near the 66.65 area, approximately there. So basically we managed to push it higher. Today we're seeing that the commodity is still trading above the pivot, which is a positive sign for it. And looking at this formation here, certainly we could potentially say that it's flagging out, but again, don't rush into this yet. We would like to see first a good confirmation break above these recent highs here near the 67.35 level, approximately there, and only then we will consider further acceleration to the upside. Now on the upside here, I do have this level marked here at 68.35, and just kind of going back into history, you can see that this is where the holdup occurred on the 16th of November, and from which the price started drifting lower. So that's why, guys, if we do see a nice good push above the 67.35 level around there, then yep, we could target the 68.35. But if it struggles to overcome this barrier and we see the commodity dropping below the pivot today and below the 66.65 level, well, this is where it could turn out to be a nice opportunity for the bears to just step in and drive this one lower, maybe even towards the 65 zone, which was marked here by the yesterday's lows. But if that fails to withhold, then yep, even further declines are possible. So in a way, this is what we're going to look at here. For now, from the very short-term perspective, guys, probably keep your eyes on the upside. Keep your eyes on the 67.35 area. On the downside, the 66.65. But given the current picture that we're seeing right now, at this point in time, we are slightly more bullish than bearish. But again, like I said, we're waiting for that confirmation break. Jumping into GBPAUD. Now, I was talking about this one yesterday in my trader's tea time. Basically, I was telling you guys to watch out for this nice formation here, this nice rising channel formation. And what I was telling you guys, we were trading around this area, around the 182.30, something like that, something there. Basically, you can see that we had a nice push higher. Certainly this continues to get supported, this upside continues to get supported by the weaker Australian dollar. So some news came out this morning and the Australian dollar got hit. So one news is saying that China has stopped well, put a cap on the Australian coal, so which kind of took a hit. This is where Australian dollar took a hit, and you can see that GBP Aussie now is trying to push higher. And of course, this what's more important is breaking this key area of resistance near the 1.8345 level marked by the highs of the 7th of February. So let's see if it continues to push further up. Certainly this is looking more bullish than bearish. Don't get me wrong, we might see a bit of correction here to the downside, but still keep your eyes today on the 183.45. If the pair remains continues and remains, let's say, and closes the daily candle today above this level, then we could see further acceleration to the upside, where the next possible area of resistance could be seen near the 184.40, marked near the highs of the 29th of January. But of course, if this wants to continue traveling further, then in the longer term, from the longer term perspective, we could see maybe this one even actually climbing further up here higher and potentially testing the upper bound of the of this rising channel. But again, also do not exclude the fact that we do have Brexit still. So basically, even the weaker Australian dollar could be outweighed by some negative news around Brexit, and to which the British pound is very vulnerable to. So that's why, guys, we could potentially, yes, certainly at this point in time, it seems that yes, we could continue traveling further up here, but again, keep that element of the doubt still, like I said, because we do have the Brexit developments, and those could affect the British pound, and we could see, and potentially could see a reversal here and a drop lower again. So that's why for now, of course, we are more bullish than bearish, but again, probably more something like cautiously bullish. And the last pair for this session I would like to look at is the EURCAD. Now, very interesting pair, and looking at this chart overall here, you can see that since the 1st of January it kind of continues to slide lower. Of course, on the 1st of January, in the first half of January, we saw this sharp decline from the peak of the 1.5735. so now it's kind of trading near the 149 level. So basically, of course, this is very it looks very oversold here, and also continues to trade below this downside resistance line taken from the high of the 10th of January. In a way, of course, it is looking quite interesting from maybe the buying perspective. The only thing is, because we're still below this downside resistance line, I would probably remain cautious here in general, because if we see a nice push above this downside resistance line, yes, this is where it could become more interesting for the bulls. We could see maybe a potential move further up here, especially if this decides to travel above the 200 EMA here, shown as the black line on the 4-hour chart. But if this, let's say, because it's very close to its key area of support here near the 149.15 level, so this is what you need to kind of watch out for, guys. A drop below this, below the 149.14 for 15 level, approximately there. A drop below this could lead towards further declines, but for now, guys, be very careful, be very cautious with this one. Now, of course, you could try to, in a way, manipulate the chart here a little bit. You can start drawing these things. So basically, it's a nice, I wouldn't say it's a downside channel. It's more of like a not a very clear veg, I would say. So if we do, and of course we know, according to textbooks, that these types of formations tend to break to the upside. The downside wedges tend to break to the upside, but then again, let's wait for that confirmation break first before we start looking at the upside. For now, this is looking still somewhat bearish. But again, for a better confirmation of the downside, wait for a break below the 149.15 level, approximately there, and only then you could target slightly lower levels. Okay, guys, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me later on at my trader's tea time, and that's 14:15 GMT time. But for now, I hope you have a wonderful day, wonderful trading day, and I'll see you later. Bye bye.